Alright. Oshia. Da, 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 da. Alright, we should be live. I actually missed, usually I try to do these on Saturdays, but I was a bit occupied. So, I actually missed, there we go, sound check's good. So I actually missed the opportunity to go live on Saturday. I was a little bit busy, but we're just gonna backtest. It's a really simple model, and that's what we're gonna backtest today, as well as two other things, how we moved on the daily and weekly chart. So, hey, what's up, Gorilla? So let's start on the weekly chart here. I'll actually just make this really big so you guys can see it clearly. And we'll remove everything here. And you'll see how I kind of came to all these levels. So if you remember from ICT's 2024 mentorship, he said he said that PD arrays that were once used to go higher, those will be the same PD arrays that would be used to go lower. So coming up, after this price action here, this is where we're at. This is the start of the week. So I'll just put a horizontal ray on the open. Once a week opens, you know that's the open. That's your information. And the first thing that pops up in my eyes are three things. It's this SIBI, this breaker right here, and this inversion fair value gap. The reason I used this one as an inversion fair value gap is because it was once used to go higher, so it would be used again to go lower, or at least it was my thought. So somebody asked me where I got this weekly fair value gap from, and this is where? Right there. So yeah, you got three levels. This SIBI, this breaker, this inversion fair value gap that we could try to reach to, right? ICT even said when you have a breaker and an inversion fair value gap that he would highlight this as a potential draw on liquidity. Let's go down daily chart. On the daily chart, you have some new week opening gap, or sorry, some new day opening gaps here, volume imbalances as well, and then new week opening gap here, but we were already above this. This is the opening price for this week, this last week. So we'll disregard this right here. Now we can actually get down into the model. So on the left, I'll have a 15-minute chart, and then up here is going to be a 4-hour chart, and on the bottom is going to be a 1-minute chart. The reason for these three time frames is that we're going to be using 4-hour PD arrays as our higher time frame framework, or a higher time frame support, in order to find a how would I say this? In order to find a setup on the 15-minute, then on the 1-minute. So you have like a time matrix. Your higher time frame is the 4-hour, then you drop down to the 15-minute once you're inside of a 4-hour discount or premium array, and then you drop down into a 1-minute to get your setup. So it requires a lot of patience, and you'll probably only get a couple setup a week. By a couple, I mean, let's say anywhere between 1 to 4, 1 to 4, 1 to 5. which I think is perfectly fine. Alright, so I'll actually put this to the side here. Oh, let me do this as well so you guys can see. 1 second. So screen, maybe am I screen capturing now? No. Okay, well, hold up. I want to show you guys something as well. If you guys do have, if you guys do have your charts up, have this out as well. Your layouts, like here's new day opening gaps. It says all the new day opening gaps as well, even the ones that were made prior, like this one for example, August 15th. It'll give you some more context, and your new week opening gaps. These are new week opening gaps. I have this also as regular trading hours while everything else is electronic, just for a bit more insight. So yeah, you see all the new week opening gaps, where we reacted to them, etc. So I'll go ahead and put that back on the side of my screen here. So yeah, now we're back. Cool. So when we start the week off, like I said, we're looking at 4-hour PD arrays. We opened here on this Asia's candle at 1800. This was the opening price. You get that immediately, or the weekly open. Asia on this 4-hour candle makes, or I should be a little bit more specific. Apart from using the 4-hour PD arrays, we're only taking trades during New York kill zone. So either the New York morning kill zone or the afternoon kill zone. I'm not interested in taking any trades during London or Asia. But we'll use London and Asia to set up ideas, set up trades. So right here, in this, the first thing that pops up to me is this breaker right here. This up close candle. Not sure if you can see that clearly. Let me see. I have the stream pulled up on my phone, so I should be able to. Oh yeah, you guys are good. Alright, so this bullish breaker right here, it's a 4-hour bullish breaker. I'll go ahead and extend that out. So now, on the 15-minute time frame, this is where the breaker, the low and the high of the breaker stems from. And I would be looking starting Monday to see if we use that as a bullish PD array. And how would you know to use that as a bullish PD array? We, coupled with the fact that you have this opening or weekly open, so you have a built-in discount, what you can do is wait simply for price to make a 15-minute discount array inside of this 4-hour discount array, or even past it. So let's say the price went way lower, went like down here, right? Took out some sell side liquidity and then made a 15-minute discount array to go higher. That's fine, because if your narrative is to go higher and the 4-hour breaker hasn't been disrespected, meaning that we haven't closed a 4-hour candle below that breaker, disrespecting it, it's all just intraday um, price action. Like, how would I explain this? Like the 4-hour can wick past it, but the bodies, you want to see it close inside of the discount array, right? You don't want to see it disrespect this breaker. So anything past that is just more of a discount. So on this 15-minute chart, we see that price made a low, then moved higher with some displacement, and you can grab a fib on this right here. I'll show you guys TGIF as well, that's why I had that. So you can grab a fib from this low to this high, and you're looking for which fair value gap is in a discount. The only one that's at fair value or discount is this one right here, and even this. So what I do is I'll highlight this right here and extend that out. We can go ahead and delete this now. And then you can drop down a 1 minute, and this candle right here where price came down into this fair value gap is where I would be looking for a buy. So you kind of get some consolidation. This is during London close, but you do get some entries, even though it looks kind of rough, right? Price comes down, and we come up, we make initial high, initial low, and initial high. Price fails to take out that high, comes back down, doesn't have any sell side yet, and then we just kind of meander around here. But we do take out some short-term lows down here, and then go higher. So off rip, you do have a breaker here and a breaker here that's made right at this candle. Maybe even this candle if you want to be very aggressive with your stop loss down here, which ended up running over 100 handles, right? But how would you know to get out? When you have like a huge, what ICT used to call it, like a liquidity void, right? When you have a big displacement lower like this, you would break it down into discount and premium, into quadrants. So even if this was just for a scalp and you got in at this 1 minute breaker, right? Let's say you got in at the worst case scenario, the very high of the breaker at 636.50, you would hold it at least to premium, at 673, which would be good for a little bit, like about 36 handles, a little bit less than 40 handles, and it almost goes in and closes out the entire breaker, or sorry, the entire liquidity void. Or what you would do is just run it to another breaker, so like a breaker to breaker setup where you're using this discount breaker with a 15-minute fair value gap backing it and a 4-hour breaker backing it, because this is all happening inside of this red box. This bigger red box is a discount breaker, and then this darker red box is your 15-minute PD array, your 15-minute discount array. You would go to either another 15-minute order block, premium if you just want to hold it to that, or if you're not looking at a higher time frame or something, I would shoot for a premium breaker on the 1 minute. So where is a premium breaker on the 1 minute? My automatically gravitates to these 3 down close candles, or 4 really, but this one is the one that makes the low. So these 3, we can highlight that. That's where I would try to exit on. Or you have a 15-minute up close candle here that might be used as an order block. Let me take this off now. And it's these 4 up close candles. And it just about his consequent encroachment, fails to do so, so showing some weakness. But yeah, that's just one setup using your higher time frame. That's kind of like a weight guide. So that's Monday's trading, right? There's a plethora of setups. That's Monday's trading done. That 4-hour candle that starts at 10. There you go. And then we have right here, it's kind of hard to see, but you have a small little fair value gap here. So I'll draw two horizontal lines here, super small, almost hard to see, and then you have this huge volume imbalance as well. So we'll draw a box on this. Bang, bang. And then sticking true to our word, we're only looking for setups during the New York kill zone. So this happened at 1400. This was Monday, Tuesday, 6 o'clock. There's 6, the 4 hour, the 6 o'clock 4 hour candle. Let me put this back at that. Right. So, this is Tuesday's price action. You have to believe that, or you don't have to believe it, you just have to keep this in mind that this 4 hour candle started at 6 o'clock, right? So the 4 hour candle started here. This was the open for it, 6 in the morning. Immediately, even though it's been trading higher, immediately it starts trading lower. And where is it going to be trading lower to, right? Well, you have a small little fair value gap here on the 4 hour that it could draw to. And you have another PD array, you have this volume imbalance here. So price for the 4 hour candle to make its wick trades lower into the 4 hour fair value gap and right into the volume imbalance, right into the high. I think it ticked into the high by maybe 1 or 2 ticks. Let's check. So the open on this candle is 18,648.25 and the low of this candle is 18,647.50. So it went into it by what? 3 ticks? So yeah, by 3 ticks, this candle right here. And now you see a market maker buy model ensue. And you have the framework all lined up for it from the higher time frame. So I wouldn't, seeing this, I would definitely want to get long. But if we adhere to our rules, only trading from the 9:30 open onwards, you have your 9:30 open right here. Coincidentally, it comes into a BISI and the breaker right here, and then goes higher. And let's catch up here as well. Your 15-minute time frame, you have 9:30 around here. It already took buy side, so what could you be reaching for? You could look on your higher time frame, let's say a daily chart. We're looking at Tuesday's price action, right? So Tuesday, what price is 9:30 trading at? 18, let's say what? Let's see. 18,826. You could have this volume imbalance drawn out on your chart. You could have this down close candle delineated on your chart. So from Tuesday, 9:30 open, you already know you're in a market maker buy model, right? The uh, the 4 hour candle manipulated price lower to this volume imbalance to start this market maker buy model. So you already know you're in a market maker buy model. You just need a target, right? Because if this was going to be your initial target, these highs here or the high from London, well, we already went past those highs. So what could be your target if price wants to keep going higher? Some people might be a little afraid to get into this since it's so extended already, and they didn't offer really any big big retracement, right? But that's because we had 8:30 news, and the 8:30 news just went higher, taking out London's high. So at 9:30, you could have went long to target this down close candle right here. or this up close candle right here that may act as resistance, right? Because we've been a downtrend. So we're seeing if that may act like resistance. 930 opens. You have a unicorn model right here. You have your low to your high, your lower low, and a higher high being broken with a fair value gap right there. Price comes back, trades into that fair value gap. And this breaker, I think no, it doesn't make it into the volume imbalance. Cool. At 930, so that was a potential long. Let's say you got in at consequent encroachment roughly 18,826 to 1865. Let's show up 40 handles, 39 handles as a scalp. It's pretty good. And then it kind of gets rough during this until London close, where they finally come into this volume imbalance. And you'll see how after price came into volume imbalance, we start using it as support. So first the body of the candles are closing in it, and then it just keeps wicking down into it before slowly leaving it and going higher. And even as resistance for a second during lunch comes down, retracement into a fair value gap, stop run, goes higher. It's very interesting. With volume imbalances, I find that, well, almost any PD array, but you'll see the reaction with it almost immediately on the 1 minute. Either it supports it or it doesn't. Like right here on this candle that reached the volume imbalance, we closed right at the low of the volume imbalance. Came up, look at the bodies closing inside of it. Came down into this volume imbalance, or sorry, this fair value gap. Look at the bodies closing below it, came inside it, closing inside it. Now the wicks are the ones that's dealing the damage, going lower before ultimately going higher. And you can read order flow as well, saying that it wants to go higher with things like this, right? The bodies of this candle closing inside this fair value gap after wicking inside the volume balance. Same thing here, because you got to draw your fair value gap and your volume balance like this. You use them together to go higher. Look at this. This is a little messy though, right? But it hit consequent encroachment of this volume imbalance. So you'd expect some type of resistance. Anyway, so yeah, so you're using your higher time frame, your 4 hour, to kind of frame the idea if you want to be a buyer or seller, right? If you're using discount arrays, you want to be a buyer. So then you go down to your 15-minute time frame, so it can show you some type of discount array on the 15-minute where you would be a buyer. This is also a new day opening gap as well that I tapped into, so you'll figure, right? This is that 4 hour. This is new day opening gap. So anyway, could you be a buyer here? You have a volume imbalance right here, or a breaker right here. Sorry, you have this breaker right here. We already went into the 4 hour fair value gap and the 4 hour volume imbalance, which is also new day opening gap. We came up, so you saw that order flow is bullish. It's proved that to you. Now you want the 15-minute to give you a clean entry, and there's two right off the bat that I see. You have this breaker right here. You can extend that out, and you can look at it from a 1 minute time frame to see if you have any setups. So we'll do that. So that's right here. This is also 8:30 news drivers, so we probably wouldn't take any trades, but you see how price is reacting with that. Makes relative equal highs and then comes down, hits the bottom of the breaker one more time, and then just blasts off. It doesn't give you any opportunity until right here or even right here. You can still be looking for buys, but since that's not at 9:30, there is one that is. 9:30 usually gives a retracement to a 15-minute PD array anyway. This one so happened to happen at the 9:30 candle is the candle that made the 15-minute PD array. So this one happened at 10:30, which is fine. So this 15-minute candle at 10:30 came down into it right here. Right here you could have been a buyer, or once you saw that it was being respected, you could have been a buyer right here. Boom. Or even here, right? Like, but I wouldn't want this entry because the same candle that closed this fair value gap in here and made an inversion fair value gap is the same candle that went down into this one, this more at a discount. So you could have went long here, your short could have been, or your stop could have been at the low of this down close candle, even here. And you could have been targeting these highs, this high particularly. So let's say you got in at the very top of this fair value gap, which is 18,881, and the high of this is 18,922. 40 handles or so, 30 something handles as a scalp. But you also have your higher time frame daily volume imbalances and such that you could target. So there's always opportunities for every type of um, level of risk or measure of risk that you want to go through, right? All right, Wednesday's price action. So we closed above the daily volume imbalance. We know this because this 4-hour candle went above it, and then your 1400 hour 4-hour candle is the last 4-hour candle of the day, and it closed above it. We opened up here at 6 o'clock, and then during London we see a protraction lower. Where is it protracting lower to? You have this 4-hour fair value gap here. So boom, 4-hour fair value gap. Now on the 15-minute, it's a little wonky, but on the 15-minute, you see that the bodies of the candles are all closing above consequent encroachment of the 4-hour fair value gap. And that's a telltale sign that we would be going higher, right? So we'll come over here, and it's a really clean market maker buy model. It's so nice. You have these relative equal highs. Yes, the right high is higher than the left, but that's okay. And you're looking at you're looking to enter below consequent encroachment. My thought process is that when price is showing you that it does not want to close below consequent encroachment, I want to get an entry as close to consequent encroachment as possible. Always, always. Even below that if you can, but I wouldn't want it to go below that. It's fine if it does, but I wouldn't want it to, right? So on the 1 minute, we don't even have to wait until a 15-minute PD array is made, because our 15-minute chart is showing us that it doesn't want to go any lower on this 4-hour fair value gap. It's showing you that it's respecting it, right? So on the 1 minute, immediately I'm looking for a how would you say, a 1 minute fair value gap or a 1 minute breaker, things of that nature to go long. And after we hit consequent encroachment, you get one right here, 150 or 1 minute fair value gap. Could you have taken this? Sure, you could have, but you have relative equal lows here. This low is lower than this low, just off rip. So you have relative equal lows, and you want to wait to see if they're going to take that out or not, because you shouldn't be going long with relative equal lows below you. That's a pool of sell side liquidity, right? So we would ignore this one, ignore this, Ignore this one as well because we're only looking for buys. Ignore this and just wait until this equal low is taking out. It's like IPTA tipping its hand to you saying, I'm not done going lower yet. Wait until we make these relative equal lows jagged, which it does with this move lower. And then it comes up. We make a SIBI. Draw that out. We're struggling to hit consequent encroachment. We finally do. And then it reverses. And we're going higher. And notice we framed all this using this 15-minute chart. So what could you target on this 15-minute market maker buy model? You could target this fair value gap in a premium. That's always a possibility. And that is a solid 100 handles away, right? From 987 to, let's say, 103. So that's over 120 handles away. Or you have this wick here. This long wick could be used as a premium array, so you could also target consequent encroachment right here. Is a potential long, and that's a solid 80, 70 handle move. You know, no complaints there either. But you see how you're using the higher time frame, 4 hour in this case is your higher time frame. You're using that with a 15-minute and then finally going down to a 1-minute free execution. I wouldn't use just a 4-hour fair value gap or a 4-hour PD array and a 1-minute chart. You can, but I feel like it requires an elite amount of patience because you're missing out on some of the narrative that a 15-minute time frame can give you, right? So that's why I wouldn't just use a 4 and a 1. This is kind of how I would have my chart set up. 15-minute is almost the most important to me because I can see that I don't need a 4-hour chart, but it's useful to have. But I can see that all these up close candles on the 15-minute chart, I can literally just see when it was formed. 10 o'clock, we have 10 o'clock there, we have 2 o'clock here. This is most likely a 4-hour fair value gap. I can see that. And you can count it out. You can see how long it took to be made. But yeah, the benefit of having the 4-hour is because you see how the 4-hour reacts, like how we came down, hit consequent encroachment, look at where we closed. So if you were already in a trade inside of this wick right here, you can have a way more confidence to hold until higher targets, right? So even if you were targeting something like consequent encroachment of this wick at 19,137, you get that. You get that right here. Or even the high of that, you get that right here at 19,175, and that's all before lunch. So super clean moves with this narrative as long as you have the patience and you're not over leveraged, and you're as long as you have the patience, you're not going to be taking many losses with this type of setup or with this narrative because you know you're not guessing your bias. You're not going to be chasing price. You're literally just going to be waiting. And sometimes that's the hardest thing for people to do, but you're just going to be waiting. Are we in a 4-hour PD array? Yes. If we're not, then no trade. We're in one? Yes. Okay, cool. Let's look at a 15-minute chart. Is it showing me that it's respecting that 4-hour PD array? No? Then we wait. We have no trade because you're not going to be guessing, right? Let's say that we didn't respect this 4-hour PD array on a 15-minute, and you see that we have this lower 4-hour PD array here. Am I going to chase price lower there? No, because at a drop, like in a second, price could reverse inside of this 4-hour PD array, and now you're smoked trying to go short into this one, right? Just because you're assuming that, oh, since it's not respecting this one right now, the second that I'm looking at it, it must be going for this one, right? No. Same thing for, do we even have one? No, let's just assume that we had a higher fair value gap here too, a higher 4-hour fair value gap here. Could we would we be looking for a long here? Yes. Do we understand and acknowledge that price could trade lower into the lower fair value gap? Yes. So you keep that in mind, and that's where the patience really comes in. But you get some really stellar trades like this. Really, really stellar trades. Look at that. That's literally first stage distribution right there. Second stage distribution somewhere around here. I would say probably this one right here, because it's real fast, just run up after that. And then after second stage distribution, you basically don't get a setup. You have some institutional order flow entry drills somewhere. Let me see. Nope. This doesn't make it there. You have this, but you're already so far extended, like you're basically kind of chasing price at this point. You have this right here. This is clean. It's a nice setup. But yeah, you're just chasing price. Well, how do you know when to get out? Because we're already at pretty high levels. Actually, this is 19,144. Yeah, okay. You could have taken this setup right here towards lunch to get out at this high at 19,175. 31 handles. It's not bad. Yeah, there's a plethora of setups once you identify the order flow, right? From a higher time frame perspective. Um, and then somebody had asked where, yeah. This is where I got that from. This was this weekly inversion fair value gap. So let's touch TGIF real quick. On Friday, I posted a chart. I'll even draw it out here. So from low to high, this wasn't part of it, but I'll just show you guys this. From low to high, you have your TGIF, your 0.2 and 0.3, 20%, 30% discount levels. Let's go on a 15-minute time frame. On my community tab, when we were right here, it's crazy. When we were actually we didn't even hit 20% yet, but we were somewhere around here. I wanted to see price come higher to go lower, right? I wanted to see if we could get a 30% retracement on TGIF. But prior to market open at 8:30, we hit 20%, marking the low for the day. It wasn't going to go any lower than that, unfortunately. It respected the 20% mark and then just slowly grinded higher. Price kind of stopped at this weekly inversion for value gaps, consequent encroachment here. It went a little bit higher here. Sorry, yeah, it went a little bit higher here during London. Yeah, we didn't kind of drop down to that 30% that I would have wanted, just because it hit 20% at 8:30. It wasn't gonna go any lower, unfortunately. So with this in mind, seeing how we respected 20% discount level, and we have these lows that are a little too clean, I would be looking for price to continue its bullish bias and move higher. On this upcoming weekly candle, we have relative equal highs here, we have relative equal highs up here, and we have this new day opening gap here. That could be a draw on liquidity, and this is almost all inside of this weekly inversion fair value gap. So we'll see what happens Tuesday or Wednesday, depending on where there's some high time frame or sorry, I shouldn't say that. Depending on where there's some news, what days there's some news, we can kind of frame out how the week is going to go. So I can actually look that up right now. I have an app on my phone for this. So Forex Factory, on Monday we have some medium impact news. FOMC member Waller speaks. Tuesday we don't have any medium or heavy impact news. On Wednesday we have 2 p.m. FOMC meeting minutes. So I probably won't trade that because I kind of dislike it. Give me 1 second. Sorry about that. I ended up getting a phone call. Um, so yeah, 2 p.m. FOMC meeting minutes. I really dislike trading FOMC events. Um, I'll have to backtest and see how the meeting minutes move, but I really dislike the manipulation, and it's just too much for me. There's candles that sometimes are like 100 handles or 50 handle candles, in 1 minute. It's crazy, or they'll do a move in like 30 seconds, even after that from C minutes that are insane, honestly. And that's on Wednesday. Thursday, we have some pretty decent news. 8:30 a.m. unemployment claims. That's a high impact. And then 9:45, we have flash manufacturing and flash services PMI. So, and 10 a.m. Medium impact existing home sales. So for a day like Thursday, I would expect 8:30 to either make the high or the low for the day, and then 9:45 to dis get some displacement in the direction that the daily candle is going to go, and 10 o'clock just kind of it just continues in that direction. And then Friday 10 a.m. Fed Chair Powell speaks, so probably no trade until the afternoon, or no trade whatsoever because it's the end of Friday. It's already it's already Friday, it's already the afternoon. Price is kind of dying down, so there's not really much that you'll have to do there to do anyway. Kind of like this here. After lunch, it gives you a range to trade, but it's nothing like this move lower or this initial move higher. So that's pretty much gonna be it for me. I think this is um, what I gravitate towards the most in trading. Um, and it's kind of foolproof, as long as you have that patience and you have your intraday targets like these relative equal highs to target to go higher, just showing you the liquidity pools, these highs, etc. Um, you'll be perfectly alright with this ideology, and you'll spot the market maker buy models and sell models way easier on a 1 minute chart after you framed it on a 4 hour from a 4 hour narrative, a 4 hour discount or PD or premium array. So that's gonna be it for me, guys. I appreciate anybody who kind of came out and checked it out. Sorry I wasn't here to do this yesterday. I really would have liked to, but life gets in the way. Um, but yeah, we'll be here. We'll be trading on on Monday or Wednesday. Probably not Tuesday since we don't have any news, but I'll be looking at the charts around open. New York open at 9:30 to see if anything looks interesting to me. But I expect it to just be a little choppy, so I won't waste too much time in front of the charts. Well, I'll see you guys, alright? You guys take care, subscribe, give it a like, and refer some friends to learn this as well with you, man. It's always, I feel like it can be beneficial to learn it with people if they have a similar mindset to you. Um, but it's not always the case.